Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday the 4th of June. We've got a slight retracement in the risk appetite angle that we've had that's driven markets higher over recent couple of weeks really. Look at that strong run higher on the S&P 500, but it's slight rolling over on US futures today. We've had sort of in the last couple of days, 2 or 3 days, sort of question marks surrounding how the US and China trading relationship was going to develop now that the US has denounced China over Hong Kong. And it really does sort of have some mixed reports actually. Suggestions are now that China maybe are cutting back on US imports. So that has sort of taken the edge off this risk rally a little bit. It also comes ahead of the ECB monetary policy decision today. There could be a fact of buy on rumour, sell on fact with that ECB meeting in the market. It's had a really strong run up through the last few sessions, and that sort of could play into how markets respond to the ECB. They're expected to increase the the pandemic emergency purchase program, the PEPP, by 500 billion euros today. No change on rates, but that sort of has been basically priced in over recent sessions. So maybe you see a little bit of a corrective move on the back of that. But generally speaking, equities are slightly lower. The dollar's had a bit of a comeback, bit of a rebound, nothing too significant by any means, but certainly a little bit of a rally that we've seen on the dollar index in the past session. So we're slightly seeing that playing out today. We've seen treasury yields that have started to pull a little bit lower after a really strong move yesterday. So a little bit of a retracement move, but nothing too significant as of yet. Now, today we do have, as I said, the ECB monetary policy meeting, but also you've got the into the afternoon, you've got the US jobless numbers. ECB, as I said here, not expected to move on rates. But then as we go later into the session, we've got the US jobless claims, the weekly numbers, 1.8 million jobs of claims expected to be seen today, down from 2.1 million last week. So that number continues to unwind, although obviously 1.8 million jobs is again a huge number, but that's basically the sort of main bit of data point we're looking out for today. Now, in terms of my chart of the day, I'm looking at silver today. Silver has had a really interesting rally, strong rally actually in the past few weeks, and that move has just sort of dissipated in the last session or so, a couple of sessions, and it's unwound back to the breakout point around 1660 area of that old May high, but it also coincides with this uptrend. And it's an interesting sort of inflection point, really. You would say that if you start to see the rally finding support and building again, that is a really interesting buying opportunity. But I think if that uptrend starts to breach and it starts to see a closing, consistent closing below 1660 area, it sort of starts to lose some of the impetus that's had made. Because look at these momentum indicators; they are still positively configured at the moment. I might add at the moment, but they are just starting to slip away. What I would still say though, I think you'd be looking to buy into weakness whilst silver trades above that 1665 level. I know that's a dollar away from here, but that is the higher reaction low and the important support now. So anything I think that retraces back to 76.4% fib of the big sell-off, 1720, I still think is playing as part of the risk recovery, and there's still the prospect of a risk recovery. So it'd be interesting to see how silver responds around this support level. I still believe that silver has got further upside to go. I think trading above 76.4 implies that we're going to be pulling towards the 100 full retracement, full fib retracement. And you've seen the unwinding move that has now started to find RSI support around that 30 area. We've started to see MACD lines pulling higher. Interestingly enough, a bull cross on those MACD lines now in the last hour or so. So are we starting to see that bull move starting to regenerate some support and upside momentum? Now you've got initial resistance around 1738 area. Sorry, 1773 area, my mistake, 1773. Bit of a pivot on a near-term basis, but above $18, I think that really does start to regenerate the upside momentum in the move, and then you're starting to look at a retest of the highs of 1835 and then the big high at 1894. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, and click to watch our Trader Talks videos to gain some top trading